So you probably think you own the stock sitting in your brokerage account, right? But what if I told you that legally you only own an IOU? Today, we're going to dive into the work of Caitlin Long, a Wall Street veteran who is building a bridge from that fragile system to the solid ground of Bitcoin. It's a fascinating story about what it means to actually truly own your assets.
All right, so here's our roadmap. First, we're going to pull back the curtain on this surprising ownership illusion. Then we'll head to Wyoming, of all places, to see how a real solution got built from the ground up. After that, we'll talk about a crucial warning on leverage, see how a new capital market is being born, and finally, look at why the future might not be the big explosion everyone expects.
So, let's start with the core problem. It all kicks off with a really simple question, but the answer is, well, anything but simple. It gets right to the heart of a huge misunderstanding about how our financial system actually works. No, seriously, think about this for a second. You log into your brokerage account, you see all your stocks, your funds, and it has your name right there on it. So they're yours, right? Well, the legal reality is a lot more complicated and honestly, a lot scarier than most people realize. And this is the bombshell from Caitlin Long that changes everything. We don't actually own the securities. We own a promise, an IOU from a financial institution. They are the ones with the legal title. You're just holding a claim on it. And this just lays it all out, doesn't it? On one hand, we have what we think is happening, direct ownership, but the legal reality? You are what's called an unsecured creditor. It basically means if that bank or broker goes under, you don't just get your stocks back. Nope. You have to stand in line with everyone else they owe money to, hoping to get a piece of whatever's left from a company that's already gone bust. This is the fundamental, shaky foundation that Caitlin Long set out to fix. Okay, so if the whole system is built on this illusion, where do you even begin to build something better? Well, for Caitlin Long, the answer wasn't on Wall Street. It was back home, in Wyoming. You know, this whole thing started with something surprisingly simple. She wanted to donate some appreciated Bitcoin to the University of Wyoming, but a clunky state law made it impossible. So she went to fix it. And that one law, it passed unanimously. Suddenly the legislators were intrigued. They started asking, what else have you got? And that one question sparked a movement that led to Wyoming passing over 50 laws to enable crypto innovation. So what did it take to get them on board? It wasn't just dry, technical arguments about blockchain. It was seeing new, younger faces showing up to legislative meetings. It was hearing stories about a grandma who was mining Bitcoin in her garage, or teens who drove 6 hours just to be there. For the first time, they were seeing tech talent moving to Wyoming, not away from it. And maybe most importantly, they got the problem of debanking. You know, where a bank can just shut down your account because they don't like your business. They understood that threat on a gut level. Okay, so even if you build this amazing new system with solid legal foundations, there's still a huge danger lurking. You can fix the code and the law, but you can't always fix human nature, especially greed. And in the world of finance, greed's favorite weapon is leverage. And this is a line Caitlin Long came up with herself, and wow, is it on the money. It's such a perfect warning. The power to borrow against your assets is incredible, but when you mix that power with something as volatile as Bitcoin, well, it can wipe you out in the blink of an eye. And look, this wasn't just some abstract, theoretical warning. She was saying this before everything went sideways with companies like FTX, Celsius, and BlockFi. Every single one of them was playing with fire, with way too much leverage, and in the end, it was their customers who got burned. Yeah, and this is a really important distinction she makes. Not all debt is bad. There's commodity credit, which is the good kind. That's borrowing against savings you actually have. It's grounded in reality. But then there's circulation credit. That's the danger zone. That's when you start lending out money that doesn't really exist, creating it out of thin air. It's a house of cards, and as she puts it, it's always bound to end badly. And for her, this is personal. It's not just some economic theory. It's a story from her own family. During the Great Depression, her grandfather was a farmer. All his neighbors were borrowing against their farms to play the booming stock market in the 1920s. He refused. And when the crash came, his neighbors lost everything. He kept his farm. It's just such a powerful, real-world lesson about the danger of chasing paper wealth. Okay, so with that huge warning about leverage in our minds, let's pivot to the really hopeful part of this story. Because while some people were gambling and getting wiped out, others were quietly using these new tools to build a brand new, much sounder financial market. So when you ask her, what's the single most exciting, most bullish thing happening in this space right now, her answer is simple.
Bitcoin treasury companies. This is where the real sustainable innovation is happening.
So, what does that even mean? How does it work? Well, it's actually pretty straightforward. It starts with a company deciding to hold Bitcoin as a treasury asset on its balance sheet. Then, when it needs cash for its business, instead of selling the Bitcoin, it just borrows dollars against it. And when enough companies start doing this, their borrowing creates natural interest rates. And boom, just like that, you have a yield curve. A brand new capital market built on a foundation of Bitcoin is born. And this isn't just an idea on a whiteboard. Michael Saylor and his company MicroStrategy, they're the ones who actually went out and did it. They created the blueprint. They showed the entire corporate world that this was possible, paving the way for everyone else. So this all leads to the big question, right? How does this all end? Does the old system have to come crashing down in some big fiery explosion for the new one to take its place? Well, according to Caitlin Long, the best way forward is actually much quieter. When you think about it, you can kind of see two paths forward. There's the Big Bang Theory, a sudden, chaotic, painful collapse of the financial system we know. But Caitlin Long is hoping for and working toward the whimper scenario. That's a slow, gradual transition where we build the new, better system right alongside the old one, giving people a safe bridge to walk across. And there's a really powerful personal reason she feels this way. Her own father was born just a few days after the big stock market crash in 1929. He grew up in the hardship of the Great Depression. She knows the real human cost of these events, and she has absolutely no desire to see anyone live through that kind of catastrophe again. So at the end of the day, the goal isn't to just burn down the banking system. Banks can still exist as service providers. The ultimate vision is a world where we are no longer forced to hand over our life savings to these highly leveraged institutions. The key is having a choice. The key is having the option for true, direct, and final ownership of your own wealth. And all of this really boils down to one final huge question for all of us. As this new bridge gets built, and as the cracks in the old system get more and more obvious, will the idea of holding your own keys, of having self-custody of your wealth, stop being some niche, techie idea, and actually become the new standard? The answer to that question could literally reshape finance for the next 100 years.